Did you know that Elon Musk recently announced an insane prediction for Tesla stock? While a lot of people believe that Tesla CEO Elon Musk speaks whatever is in his mind to create a controversy, others believe that what he says sometimes is worth listening to. Stay tuned and keep watching to find out more about this. Tesla CEO Elon Musk is known for his controversial statements. Most people believe that he does this to be in the news, thus creating noise for himself and consequently Tesla. No one can disagree that if it is true, that is a fast and easy way for Tesla to create traction. That right there is a great and free marketing strategy. That is, if it is true. In today's video, you will see Elon Musk's insane prediction for Tesla stock. It can be noted that in an internal email in early June, Tesla CEO Elon Musk told his executive team to cut jobs and pause new hiring, according to a report by Reuters. A few days after that, a follow-up email specified that the job cuts would be for salaried employees, which includes management and supervisory roles. That said, what can Musk's insane prediction for Tesla stock be about? According to experts, there are both positive and negative forecast factors for Tesla in 2022. Positive factors include the Starlink project, aggressive production, China, and the newly built factories in Austin and Berlin. For the past years, Elon Musk has been working on the Starlink project, intending to provide the internet to the remotest spaces on Earth through a network of private satellites in orbit. It picked up pace in 2021, and Starlink now has more than 2,000 satellites to boast. Musk tweeted that Tesla shareholders may benefit from the Starlink IPO. Moreover, Tesla managed chip shortages by replacing the chips with substitutes and rewriting its firmware. This enabled Tesla to manage production way more efficiently than most manufacturers. This has been very helpful when the industry faced supply chain issues due to the COVID-19 lockdown in China. China is a huge market for Tesla and EVs in general, and according to estimates, China will represent 40% of deliveries for the EV maker in 2022, contributing nearly $400 to its share price. If China's market is handled properly, it could mean a big tailwind for Tesla. Finally, opening up new gigafactories in Berlin and Austin in 2022 can provide a big boost to production. It will increase the global presence of Tesla and increase its capacity to produce 2 million units annually from roughly 1 million units today. On the other hand, negative forecast factors include competition, interest rates, and other economic factors, as well as regulations, fees, and fines. While Tesla is the undisputed leader of the EV market in the world, a range of competitors is lined up to take a bite out of Tesla. Moreover, fears of increasing interest rates and the Fed announcing bond tapering, changing the mentality of retail investors to book profits in high-growth stocks and shift towards less expensive ones might impact Tesla's forecast for 2022. As of late, Tesla has not been a darling of regulators, and heading into 2022, it could mean trouble for the company. There may be various fines and fees involved and potential scrutiny in the expansion plans of Tesla, as China's plans is not liked by many in the US, and increased regulatory scrutiny affects the cash flow and production efficiency, to say the least. Still, Tesla reported earnings in April, and most of the results beat estimates. Most analysts are optimistic about the stock, owing to sustained demand globally, as well as the dramatic rise in prices of oil. Tesla has also managed the issue of chip shortage better than most competitors. Lastly, the opening of the new Gigafactory in Berlin reinforces Tesla's engineering and execution capabilities. On April 20th, Tesla published its financial results covering the first quarter of the 2022 fiscal year. Total revenues ended at $18.76 billion by the end of the first quarter, resulting in an 81% year-on-year jump in the firm's top-line results. Automotive revenues continued to account for the bulk of this figure at $16.86 billion, resulting in an 87% increase compared to the same period a year ago. Tesla's GAAP gross margin rose 779 basis points at 29.1% compared to Q1 2021, while operating margins experienced a 1,349 basis point boost at 19.2%. Tesla's GAAP net income ended at $3.32 billion, resulting in a 658% year-on-year increase. Earnings per share rose 246% on that same time basis to $3.22. During the same period, the company produced free cash flows of $2.23 billion, while total cash, equivalents, and marketable securities stood at $18.1 billion. By the end of the same period, the company had $3.15 billion in long-term debt and financial leases. Total assets stood at $66.04 billion, including $1.26 billion in Bitcoin. In a leaked document in 2011 from Tesla to investors, Musk supposedly said, "Second place should need a telescope to see us." This goes to show that as early as 2011, Tesla has been leading in EV production and all other EV makers are so far behind them. In a 2013 interview, Salman Khan, an American educator and the founder of Khan Academy, a free online nonprofit educational platform and organization, asked Tesla CEO Elon Musk where he thinks the EV industry will be in the next 5 to 10 years, as well as what gave the now leading EV car maker leader confidence to pursue this venture. At the time of the interview, Tesla's market cap was around $6 billion. With Tesla, the goal is to try to accelerate the advent of sustainable transport, came Elon Musk's answer to Khan's question. Musk shared that he thinks it will happen anyway. He said, "We have an unpriced externality in the cost of gasoline. We were pricing in the environmental effects of CO2 in the oceans and atmosphere that's causing the normal market forces to not function properly. And so the goal of Tesla is to try to act as a catalyst to accelerate those sorts of normal forces that the normal sort of market reaction would occur." Do you think Tesla's aim to transition the automotive industry to electric vehicles is possible? Share your thoughts in the comment section below. Musk said that they are trying to have a catalyst effect on that and make it happen within 10 years. He said for that reason, Tesla is making electric cars and not any other kind of car. At the time, he shared that they supply powertrains to Toyota and Mercedes and plan to do so in more car companies in the future. He said the goal is to help accelerate the production of electric vehicles. As early as 2013, Elon and Tesla's goal is to accelerate the automotive industry's transition toward electric vehicles. He shared, "Our goal is not just to become a big brand or compete with Honda Civic, but rather to advance the cause of electric vehicles." Musk said that they are just going to continue making more and more electric cars and driving the price point down until the industry is fully electric. When Sal Khan asked Elon about his thoughts on when half or all vehicles will be electric, Tesla's CEO answered, "I made a bet with someone that it would be sooner than 20 years, so it's 17 years from now. But I think that's conservative. I think it's probably maybe 13 or 14 years, right about the time when we're going to Mars." Having this kind of prediction in 2013 may be kind of insane. 13 to 14 years from 2013 is around 2027 or 2028. While some may still say that this is an insane prediction today, it is yet to be seen whether or not Elon Musk was right about that. The nature of new technology adoption tends to follow an S-curve, so what usually happens is people under-predicted in the beginning because people tend to extrapolate on a straight line, says Elon Musk. He added, "They will over-predict it kind of at the midpoint, and because there are late adopters, it will actually take longer than people think at the midpoint, but much shorter than people think at the beginning." But I'm pretty excited about how things are going. In fact, I think that the pace of technology improvement in energy storage is really moving faster than anyone thinks. While Tesla has proven itself quite successful in the industry, there is no telling what the future of the company will be like. Today, investors are torn between selling and holding their stocks given the company's performance in the stock market. There are insane price valuations for Tesla in the future from those who remain bullish. For investors, the takeaway is that Tesla stock could see tough times ahead, at least for the short term. Tesla shares are already down more than 30% year to date, but they remain richly valued by traditional metrics. The stock's price-to-earnings ratio remains around 100 based on earnings for the past 12 months. That implies investors see significant growth over the coming years. For a leader in a quickly growing industry, those growth expectations would seem to be reasonable, especially with the company itself saying it expects 50% volume growth for several years. But the new developments could indicate some amount of slowdown in that growth. If Musk's prediction for a slowing economy pans out, the impact on Tesla's share price could be meaningful. That shouldn't bother long-term investors too much, but for those looking to start or add positions, there could be much better opportunities coming for Tesla shares at a lower price. Make sure to visit our channel and watch our other videos.